April 1st, 4 weeks from today, every stockbroker in India operates under a completely new funding model. RBI has just mandated 100% collateral for all bank loans given to brokers. Here's what this means for your margin trading and brokerage fees. So the new rule in simple language basically means that banks can no longer lend to brokers without collateral backing every single rupee that they have asked for. The old system used to work this way, that the broker used to post some collateral to the bank and used to get a loan amount that was bigger than that collateral. This new system, if a broker is posting 100 crore rupees as collateral, then the maximum loan amount that they can get is also 100 crore rupees. No more flexibility and no more partial collateral. Second major change is that banks are banned from funding a broker's own trading. Brokers cannot borrow from banks anymore to fund their own trading. Only client-facing services can be funded. The major reason for RBI to do this was because brokers were using bank money to speculate in the markets. When markets crashed, brokers could not repay the banks. So the banks basically funded risky bets that they should not have done in the first place. So RBI simply mandated to stop this financing speculation. If you want to lend to brokers, it should be 100% collateralized. And it must be for legitimate client services only, not for the broker's own proprietary trading work. Third specific change that affects you is if you take margin trading facility from brokers, which basically means borrowing money from them to trade in the markets. This requires 100% collateral, as I mentioned before, and this increased cost will ultimately get passed to you. Therefore, margin trading facility has just gotten more expensive. Understand that this rule affects small brokers in particular because they are so heavily reliant on bank loans to fund their operations. Big players like Zerodha, ICICI Direct, or HDFC Securities have strong balance sheets. They don't rely on bank loans for their operations as much. Understand how this widens the competitive advantage altogether. If you use margin trading facility, expect costs to tighten and these increased fees to pass on to you starting April 1st.